viewers, Namaste. This is Chokkalingam Palaniappan from Prakala Wealth Private Limited. Today, as markets are rising, lot of people are thinking about quitting SIP, or at least they have confusion. Should I stop my SIP in equity mutual funds? Because the unit prices in a rising market keeps increasing, and your average price, overall average price keeps increasing. Whereas in a going down scenario, in a market which is falling, your average unit price keeps going down. That would be the best time to accumulate mutual fund units. However, SIP is a month-on-month investment. Rain or shine, people are investing in SIP. Today, all over India, more than 8,000 crore per month is being invested through SIP mode in equity, debt, in all the funds, in all the mutual funds available. So now the $1 million question is, should I stop my SIP as markets are going up and up? Before getting into that question, should I stop, should I continue, should I pause, whatever, there are a lot of options available, should I change? Before that, let us see why I started investing in mutual funds through SIP mode. Because each of us have a goal. We have like retirement, many people are saving for their child education, children marriage, or to buy a house, or to buy a car, or to do philanthropy. So at some point of time they want to give back to the society. So for that also today many people are saving, of course, in a smaller or bigger way, it doesn't matter. But there are customers with us who are investing 1,000, 2,000 rupees per month for philanthropy. Whereas at the same time there are people who are investing 25,000, 50,000, 1 lakh per month towards giving back to the society. So there are various kinds. So our goal, whether you should decide whether your goal is important or the best return is important. For most of the people, for many of us, life's goals and ambitions are more important than getting the best, the best return out of investing in mutual funds. So when goals are important, you have to save month on month till the time you are earning. You could be a businessman, you could be a employee of an organization, whatever you could be. But as long as you keep earning month on month, you must keep investing through SIP mode. Okay, now the question is, okay, my average return will come down. Yes, definitely. Generally when we talk about equity mutual funds, in the longer term we are targeting a return of 12%, let us say 10 to 12%. It may be 10, 11, 12, 13, 14, whatever. Average, I guess that Indian markets could give in the future about 12% per annum on a compounded basis. So on the other side, look at deposits. If you don't want to take risk, deposits, recurring deposits, or post office savings, whatever, for the regular aged people, the deposit rates are around 5.5% on one hand. On the other hand, we have equity mutual funds which are delivering on a longer term, which are expected to deliver about a 12% return, let us assume. So you are getting 5 to 7% higher. No, you are getting 100% higher, or more than 100% when compared with recurring deposits or fixed deposits. So would you choose this 5.5% and then you deduct your taxes and then you get 3.5%, or would you choose like a 12% return product in the long term where you pay 10%, so you pocket like 10.8% or 11% approximately per annum? So this is the thing that one should decide, and then if you stop SIP, what are you going to do? The money will get into some expenses, some gadgets. You will buy some gadgets because you have a lot of money in your savings bank account, or you will make a tour, or you will buy a car, whatever, or just you may give out as a loan to your relative or a friend, Most of the time it happens when you have a lot of money in savings bank account. So instead of doing all those things, it is better to stick with your SIP. And in investment, discipline is the most important aspect. Rain or shine, you should keep investing. However, if you really think and if you can really gauge the market and you are really sure that the markets are on the higher side, you want to reduce your risk level, you may think of a fund like Balanced Advantage Funds, BAF. In the industry it is called BAF, BAF, Balanced Advantage Funds, which are dynamic asset allocation funds. They vary their equity allocation depending on the market conditions. Still, if you don't want to take any risk, probably you may get into ultra short term funds or low duration funds. Switch the SIP. Instead of equity funds, either you may 100% equity funds, you may switch to a BAF kind of fund or a debt fund. That is the maximum leeway I can think of. But never ever think of stopping the SIP completely and moving the fund elsewhere since markets are high. Who knows if the market will continue rising for the next 2, 3, 4 years? Who knows if the market will come down all of a sudden in the next 6 months? None of us know. So in that scenario, everyone is equal because everyone are clueless and everyone are equally knowledgeable. So in that scenario, it is better to be little foolish and keep investing in the time tested SIP model. Today all over India, people are putting more than 8,000 crores of money into SIP. Rain or shine, that 8,000 plus crores is coming. Also think of government employees. Lakhs and lakhs of government employees are putting money into NPS. That NPS puts money into stocks as well as bonds. So those employees don't go and stop their monthly contribution, or government does not allow them to stop the contribution. Similarly, you are doing for your retirement, for your kids' education, for your kids' marriage, for your later years. Hence, never ever think of stopping SIP. Rather, if at all, in the worst case scenario, you may switch the fund type within mutual funds. Thank you very much. See you in another video soon.